Well, in our banking sector review of Q4 FY24, we did highlight that in Q1 FY25, net interest margin of the banking sector will be under pressure, credit cost and asset quality will rise owing to normalization. MFI loans and unsecured loans will see deterioration. Not much to our surprise, the results are quite the same. Net interest margin has come under pressure. Deposit growth is coming in at a huge cost for many lenders. Credit cost is rising. Deterioration is happening on asset quality, especially for private banks being higher than PSU banks. Pain has continued, especially for lenders having exposure to rural market like microfinance loans, and now even for lenders having exposure to unsecured retail loans. Let's take a look at this in a detailed manner. Now, it was a tale of two cities for PSU banks and private banks in this quarter. So, PSU banks saw their operational performance being weak in Q1 FY25, while private banks on the other hand saw their asset quality deteriorate the highest in last 3 years or 12 quarters. Now, despite low credit deposit ratio, PSU banks saw their NII decline on a sequential basis. Private banks' NII growth was about 2.5% quarter on quarter, largely led by the high yielding retail loans. Dhanlaxmi Bank is the only lender to see YOY and quarter on quarter decline in its net interest income for second quarter in a row. Now, calculation shows that the net interest margin might have declined by 10 basis points for PSU banks and improved by 7 basis points for private banks. So, overall, the net interest margin has declined quarter on quarter for all the banks at an aggregate level. Operating profits got impacted in Q1 FY25 due to weakness in NII growth that you had, lower treasury gains and higher OPEX as well. Overall, operating profits declined by 4% quarter on quarter. So, operating profits for PSU banks declined by 2% quarter on quarter, and for private banks, it declined by nearly 6% quarter on quarter. Now, again, Dhanlaxmi Bank is the only lender to report an operational loss for second quarter in a row. 19 out of 39 lenders saw their operating profits decline quarter on quarter for this quarter. So, PAT growth also declined higher for PSU banks on a sequential basis. So, PSU banks profits declined by more than 40% quarter on quarter versus a gain of nearly 3.3% sequentially for private banks. Overall, banking sector's PAT declined by 1.3% quarter on quarter, and this is ex of AU Small Finance Bank. Dhanlaxmi Bank was the only lender to report net loss in Q1 FY25. PAT declined YOY and quarter on quarter for players like Equita Small Finance Bank, Ujjivan Small Finance Bank and IDFC First Bank as well. 14 lenders saw their PAT decline on a sequential basis. Coming on to asset quality, private bank slippages increased substantially when compared to that of PSU banks. So, private banks quarterly slippages increased by nearly 11% quarter on quarter when compared to 6.5% growth quarter on quarter for PSU banks. So, overall slippages increased by 8.7% quarter on quarter in Q1 FY25 for the banking sector. The slippage growth rate that you are seeing in Q1 FY25 was 8.7% quarter on quarter. This compares to more than 10% quarter on quarter ex of AU Small Finance Bank that the banking sector saw last year, that is Q1 FY24. Now, asset quality of the banking sector continues to remain robust, one of the best in last 9 to 10 years. So, sequentially, highest increase in gross NPA ratio and net NPA ratio was seen for private banks in last 3 years or even 12 quarters. So, absence of recovery and upgrades largely has impacted their asset quality, along with the fact that slippages were on the higher side as well. Interestingly, net NPA ratio difference between PSU banks and private banks is now only 19 basis points, the lowest ever seen in the banking sector. In FY18, remember that this gap was about 552 basis points. In terms of outlook ahead, analysts do say that deposits for private banks coming in at a huge cost. So, they continue to see the rise in deposit rates, which can impact the net interest margin to decline further. Now, weakening government business and private banks making inroad into Suru, that is semi-urban and rural market, deposit growth has weakened for PSU banks. Loan growth is slowing down, especially for lenders with high market share. Credit cost and asset quality will rise owing to normalization in FY25. Now, microfinance loans and unsecured loans have seen deterioration in asset quality, which can increase pressure on earnings going ahead as well. 6 states are going into elections in the next 18 months. So, any farm loan waiver, if that comes in, can impact lenders as well. These states, remember, they form about 20% of system's agri loans and have double-digit NPS already.